Welcome back to the channel. In today's video, I want to talk to you about self-employed. If you're in fact self-employed, which a majority of my clients are, I'm located in Los Angeles. My name is Zevi. I'm an owner of a company called Lombrook Inc. We're a wholesale mortgage company. And again, a majority of my clients are in fact self-employed. So when you're thinking, okay, I want to buy a property, where do I actually start being self-employed? What exactly is the lender going to be looking at? If that's the information you're trying to understand, then you're watching the perfect video. With that, let's get started, all right? So being self-employed, it's really not that tricky. The key here is that just like anything, let's talk about income in general. Anytime a lender is looking at income, really what they're looking for is a 2-year history and potentially a 3-year continuance, okay? So if you own a small business and that's how you make your income, then basically we have to have a 2-year history to be able to use that income. That's number one now. And so you might also ask yourself, how would they know about my 2-year history when I started my business and so forth? Couple things. Number one, it depends on how you run your business. So typically, if you're self-employed, you're either running a Schedule C, which is basically a DBA, sole proprietor, or you're running an S corporation. These tend to be the most common ways of running a business. Now, mind you, if you started off as a DBA and then you converted your business to an S corporation, that's okay. You could still bridge the gap of 2 years. Hopefully, the names of the businesses are the same. Perhaps you went from John Smith to John Smith Incorporated. And both of these items would work perfectly fine, all right? But that 2-year history is basically what the lender is really looking for. Now, in terms of how you run your business, like I said, whether you're running a Schedule C, then we would basically size up the Schedule C from your actual tax returns. And that is a part of your personal tax returns. When you have a Schedule C, it's incorporated into your 1040s, all right? However, when you have an S corporation, then what happens is there's a separate filing for the S corporation, and then you get a K1. And the K1 gets filtered into your 1040s, and that's basically where you report your income. Now, you might be thinking, okay, how exactly do they look at my corporate income? Because what a lot of people do is they have 2 separate flows of income, especially being self-employed on an S corporation, very typical. You have your W-2 income, all right? And then you have your ordinary income. Now, people ask me this question, what if I pay myself today, say $3,000 a month, and then next month, when it's time to qualify, I pay myself $5,000 a month, again, W-2. So that means my income went up. Would I be able to qualify for more money? And the answer is no, simply because when you're self-employed, it really doesn't matter how you pay yourself. It's a 2-year history, whether you're getting the money as a W-2 with pay stubs, or you're taking your money as a distribution with a draw through your, through your corporation. It really doesn't matter how you do it, because at the end of the day, you are the one paying yourself. It's not a third party. If a third party, we're getting checks for $3,000, and then the next month you got a raise to $5,000, then yes, we would want the letter that you're getting a raise to show that, in fact, you're going to be qualifying on more money. But that's not the case. It doesn't matter how you pay yourself. So typically the way this works is you're going to have your sales, your expenses, and then your ordinary income at the bottom, which is basically the same income that's going to match your K1s. If you're wondering if there's any add backs, you might have heard about that, add back to your income. And the answer is yes, it's true. There's add backs and there's also subtractions. So when I look at your corporate return, I'm going to be adding back things like depletion, amortization, casualty loss, one time, all right? Those are add backs. Now, if you have any type of withstanding debt that's due within 1 year, so those are notes that are due within 1 year, we're going to have to hit you for that liability. And then meals and entertainment, you get hit for that as well. All right. You do get miles back as well, but that's basically how we size up your corporate return. So if you are in fact self-employed and you're thinking about getting a loan, I think the best thing to do would be to reach out. My number is 818-697-8220, because by providing us 2 years worth of your either corporate or self-proprietor returns, we're able to analyze the income. It's very different than somebody providing us with a W-2 and a pay stub. We don't even need tax returns. You see, when you have the flow of a self-employed borrower, it's all about what's been filed. All right. You might say, hey, Zevi, I'm having a great year. I'm making like double the amount of money I made last year. Thing is, your income hasn't been filed yet, so we can't use it. It's exactly the same as if, I'm going to go back to you having a W-2 and a pay stub working at a company. We don't even need your tax returns to qualify you. However, if you told me, hey, by the way, I also have rental income coming from a rental property, then I would need your tax return even if you are not self-employed. You see what I mean? So a lot of it depends on the flow of the income and where it's coming from. So 2 years being that you've had the income, it's been filed. Yes, we can analyze it, we could use it. If you had rental property as an example, I'm going to give you this other example. And you said, oh, well, last year when I filed my taxes, I had a lease in place for my tenant for $1,000. And now this year, we're collecting a lot more money. The rent went up like significantly to $1,500. Here's the updated lease agreement. Again, can't use it. It hasn't been filed. Same concept exactly. Anytime you have money coming in from your company, from your rental properties, anything associated with you directly, the income has to be filed for us to be able to use it, okay? Hopefully that answers some of your questions. I think that's all I got for you on this particular topic. It's very specific. So I think that if you have questions about it, just drop them in the comments below. I'll be happy to help you with it. We've been analyzing self-employed income for well over 10 years. We're pretty good at it, all right? If you like the video, please make sure to give it a thumbs up so it gets a little push in the algorithm. Hopefully other people like yourself who are looking for this information can find this video. And in addition to it, if you enjoy content like this and you want to see more videos like this, then please remember to subscribe to my channel. Otherwise, I really appreciate you watching this, and I hope to see you again on the next video. Take care.